So, guys, there has been, in the last almost a decade of my experience in the Forex market, a lot of myths that have come and gone. Now, the important thing we want to do today is we want to demystify these myths and once and for all debunk them and separate the facts from the fiction. So a member of my team is going to be asking the questions because we did a poll and a survey to get the most questions asked by both beginners, intermediate person, and even advanced traders about the Forex market and myths that people have believed to be true that have cost them a lot of money. We want to debunk them and demystify them. So if you're interested in that, stay along for the ride and enjoy this. Value is the only thing. I'll say this again. Value is the only thing that attracts wealth. Are we following? Value is the only thing. There is nothing else in the world. And I'm going to prove it to you right now. Alright, so someone asked, is Forex a get-rich-quick scheme? Now, the answer is absolutely not. But if I say that, it's not going to give you a lot of clarity on the matter itself. So let's dive in a little bit deeper. Now, the important thing to understand is a lot of things in life involve patience to grow. Anything, as a matter of fact, that grows takes time. So Forex is no different. If you really want to see progress in Forex, you need time. And the moment we put the time factor attached to growth, we realize that get rich quick schemes begin to fail, because there is a law of life: easy come, easy go. If you make a lot of money too fast, you also lose a lot of money very fast. So the only way to build consistent income over time is to make consistent gains. They may not seem big in the grand scheme of things, but when added up over time, they still amount to the same large gain you were looking for at the beginning of your career. So a lot of people have lost so much money at the start of their Forex journey simply because they came in with so much greed, because they wanted to get rich quick as fast as possible. It is not a get rich quick scheme. Every other venture in life, stocks, bonds, ETFs, commodities, even physical businesses, require time to grow. Forex is no different. Look at it as a business. It needs time to grow. Be educated, gain knowledge, and put that into perspective. Gain some expertise in the industry and allow patience and time to do its work. Whereas you begin to understand what you're doing, build a skill set, and make profits over time. All right, so someone asks, what about trading without risk? So inadvertently, when you talk about anything in life, it involves a degree of risk. As a matter of fact, even in our daily going out and coming in, there is a risk attached to it. We have to enter buses in which we don't know the drivers. Even if you enter a plane, you don't know the pilot, but you trust that they have a license and they've had flight hours. This is very important. This is very key. So we have a base of trust based on the experience and knowledge gotten by these people. That's why we're able to enter the buses confidently. That's why we're able to enter the planes confidently. So everything we do in life has a risk attached to it. Forex is no different. As a matter of fact, in an interview I had, which we're going to put the link in the description and at the top right part of this video, I was asked a question, is Forex risky? Now, the truth about life is anything done without knowledge is risky. If I see a driver driving a car without knowledge, that is risky. It's going to kill somebody. It's going to have an accident. So we tend to learn how to do things before we actually do them. So anything done without knowledge is risky, not just Forex. So when it comes to the Forex market, it is the same. You can never completely eliminate risk in the Forex market. What we can do, however, is make calculated risks and educated decisions. And this is exactly how we trust the pilot to drive the plane, and we trust the bus driver to drive the bus. So this is a question I've gotten a lot. So someone asked, following blindly when trading with signals. Now, I've never believed in signals because, signals are so dangerous. One of the reasons signals are very dangerous, we're going to come to the blind part, but signals stunt your growth as a trader because you are putting your dependency on your decision making in the hands of another person. It's important to understand that everything we do in life, it all comes down to a decision. What we choose to wear, what we choose to eat, where we choose to live, where we choose to go, who we choose to have as a friend, everything in life is a decision. Trading is no different. The decision in trading is to buy or to sell. It comes down to a decision. And if that is true, decisions affect our outcome and output in life. So it's important to understand that it is dangerous to put your decision in the hand of another person, especially blindly. So what I always encourage people is rather go for mentorship, where you learn how to do that thing by yourself, and not just by yourself. You can also find a unique way that is unique to just you to do that same thing, rather than following someone blindly and end up making mistakes, end up losing money, end up also not growing, which is the very dangerous part, because you're not making any progress, you're not growing, you're not developing as a person. And this is very dangerous, because in the long term that's going to cost you. And every investor looks at the long term, not today, not tomorrow, not the next month, but the next years, the next couple of years. So you must always have the long-term perspective. You do not want to put your dependency on another person, especially when you don't even know where they're going, because if they're heading for a downfall, you're going right straight with them. So signals are no for anyone that needs longevity in the investment and forex markets. It is very, very risky to put all your eggs in one basket. That same principle goes to analysis. When it comes to assets, you want to diversify as much as possible. The more spread out risk you have diversified, the more safe your investment is. So when it comes to analysis as well, you need to diversify your analysis. We have fundamental analysis, we have technical analysis, and we also have sentimental analysis. Most traders put so much emphasis on technical analysis and forget that there are other kind of analysis, and that just objectively puts you far away from seeing the full picture. And anybody that does not see the full picture can never make an educated decision. And this is the reason why we see a lot of people fail in the long term when it comes to trading. They do a lot of chart work. Their chart is filled with a lot of garbage, a lot of things, and they're seeing so many things at the same time, and there is no clarity. You need clarity and simplicity to succeed, because that is what is repeatable. So in trading, you do not want to overcomplicate things. Get a bit of technicals, get a bit of fundamentals, and then seal it together with a bit of mindset towards why traders are taking trades, which is what we call sentimental analysis. You need to seal it with sentimental analysis, and this is how you make progress, rather than putting all the pressure on technicals and then end up being wrong a lot of times, and then you quit trading after having lost a lot of money. Is forex gambling? Now, this is a question people have asked a lot. Is forex gambling? Now, the answer is it is subjective. Unlike the last question we had, which was very objective, it is very subjective. And when I mean subjective, means it's divided into two parts. We need to understand, first of all, definitions. What is gambling? If we say, is forex gambling? What is gambling? Gambling is anything that depends on chance or luck for you to win or make a profit. So if forex is based on luck and chance, that forex trader is a gambler. If forex is based on data, statistics, and mathematics, that is based on data. So that person is a professional trader, because he has data to back his decisions. He has data to back his analysis. He has data to back his results. So that is a professional trader. But if a forex trader decides to trade on chance or decides to trade on luck, that person is also a gambler. So it's a very subjective answer. Now, one thing I would say is there are abundance of information in our times and in this season, where you can get information about anything online. You can do research, you can build up a thesis on how things work, or a hypothesis on what you feel is the element that makes these things work. But when it comes to the forex market specifically, because we are dealing with money here, you have to be very careful, because there is a lot of risk to it. So I always encourage people, you need education in the forex market, not only to make profits, but to last long in the business, because I see it as a business. So if you come into the forex market without knowledge, you get to also pay the price of being ignorant. And I want to tell you right now, the price of ignorance ain't cheap. It's very expensive. It's going to cost you a lot. It's going to cost you money. It's going to cost you your mental health. It's going to cost you even sometimes your physical stability, because losing your hard-earned money, it hits differently. So in order not to fall into that category because of this myth of doing it on your own, get yourself a mentor. The Bible says there's nothing new under the sun. So whatever you want to do, there's somebody already doing it, or there's somebody that has done it. Find them, learn from them, avoid the pitfalls, avoid the mistakes, just like you are doing in this video, watching the myths that we're debunking and demystifying, so that you don't fall into the same traps. So Large capital. I believe this is the final question. So a lot of people have asked, do I need large capital to start trading? Now the answer is also very subjective. Now, yes, you don't need rather large capital to start trading, because the average retail broker that is licensed and regulated requires $250 or $200 for you to make a deposit to begin trading. So you don't need a large amount of capital to start trading. That is a myth. You do not. But when it comes to being profitable or making large amounts of profit, the amount of capital you have is directly proportional or directly related to the amount of profit you make. So if you have a larger amount of capital, you make a larger amount of profit. And I'll use a scenario to explain this. If someone has $500,000 and he makes 10% of that $500, that is $50,000, right? Now the person is putting the same amount of effort as somebody with a $500 account, but that person putting that same amount of effort in a $500 account will end up making just $50. So you can see how their capital size affected the amount of profit they made, regardless of the effort they are putting in, regardless of their skill, their time, and also their knowledge. So it's important to understand that yes, capital plays a role in your profitability, but you don't need large amount of capital to start trading. However, in this current times, we have companies like the proprietary firms, which I've dealt with, have made over $13,000 to $14,000 from these prop firms in the whole of last year, and we see that prop firms give you a larger amount of capital to manage for a smaller amount of capital entry, meaning you can buy a $100,000 account with just $500. They give you a test to pass in phase 1 and phase 2, and if you can successfully pass these phases, then they give you a funded account where you manage, and whichever profit you make, you keep 10%, you keep 90% of it, and the company keeps 10% of it. So this is very profitable for investors looking to scale up and they've gotten the skill to trade. But remember, we cannot eliminate the place of skill in trading. This is why we made so much emphasis on our seminars. We're going to put the link in the description below. We're also going to put the link at the top right part of this video where you can go watch our seminar, where we made emphasis about you having the skill to trade, learning it for yourself, becoming the money maker, knowing how to do this thing for life so that you can generate the profits wherever you are, at any time, at any place. All you need is a laptop and access to the internet. So I believe with these answers, we have debunked and demystified most of the myths that are popular among the retail space and the retail traders. And it has been a pleasure being with you and chatting with you, your favorite CEO, Caleb Okonha. Our aim as a company is always building wealth, building people, building trust, and building futures. Value is the only thing. I will say this again. Value is the only thing that attracts wealth. Are we following? Value is the only thing. There is nothing else in the world. And I'm going to prove it to you right now.